Just a quick intro. My name's Ian Coleman. I'm one of the traders and analysts at PIA First or Trading, our retail offering. Okay, we offer analytical and trade recommendations on a daily basis. I'm sure Adina will post a link in later on to you. Okay, what we're going to talk about today, we're going to talk about some medium-term forecasts. We're going to look at price action, where it's going. I'm going to show you my charts, my analysis on medium-term forecasts. I'm going to talk you through all the settings that I have and basically what I look for. So you'll get 48 minutes of as many currency pairs as we can cover, basically. I just posted in that chat just while the other webinar was going on that we've just had a rate cut, Bank of China 0.25%, and we've had an aggressive move in the dollar on the back of that. We also had no change from B of E, so we're seeing a decent push up in cable at the moment. But the one I'm going to start on is going to be dollar Swiss. Okay, because of the Swiss National Bank intervention level at 120, it's good to keep an eye on dollar Swiss for chart formations, because dollar Swiss is basically giving us an indication, or a reverse indication, -1 correlated indication of what we can expect in euro dollar. And there's a very decent formation on that currency pair at the moment. So we're going to start on that, and we'll go all the way through the majors and see how we get on, and we'll end up on the DAX. If anybody's got any requests sort of halfway through, just shout out, and we'll jump to that currency pair. Okay, just to talk you through my settings. Okay, it does look a little bit messy, but it's only because you've got the Ishimoku cloud in there that makes it look a bit hard to read. But I have sort of tamed down the Zen line, so we're just mainly looking to the cloud. Okay, we're looking to the cloud on higher time frames for support and resistance. Okay, we've then got an RSI setting. It's a 15 RSI setting as opposed to 14, which most people use. The reason behind that is I try to get all my indicators. The trouble with a lot of technical analysis is everybody's looking at lagging indicators. Okay, the Ishimoku cloud is a forward indicator. I'm using the RSI as a forward indicator, because normally when it gets to that 50 level, it will act as support and resistance. Okay, and then my moving averages, I'm not looking at them for crossovers. Okay, I'm looking at them for support and resistance. And the two moving averages that I have on the chart are a 15 EMA and a 62 EMA. The 62, I'm quite fanatical about fibs. Okay, so the 62 EMA is as close to 61.8% the golden ratio as I can get. And basically the 15 EMA is a breakdown of that exponential moving average into shorter time frames. And what we're looking for bounces off these exponential moving averages, off these support levels, off the cloud, off the 50 RSI, okay, to gain decent entries. What we look for in basically the long-term bias or the medium-term bias, okay, going into sort of the next week, 2 weeks, 3 weeks, is to try and get a view on where we think the currency pairs are going to go, okay, and then our intraday analysis is to try and not scalp into a trade, but we just bought Aussie dollar at 14, and it's now trading 72. So we're looking to use our long-term or medium-term analysis to get tight stops in for intraday calls. Okay. Please feel free to ask as many questions as possible, because sometimes it does feel that you're sitting here talking to yourself sometimes on these webinars. And I will keep on just refreshing the camera, because these are CQG charts, and basically when I change the page, it sometimes doesn't like it. Okay, so it won't refresh the charts. So I'll be doing that myself. Okay, symmetrical patterns. Again, I'm not stuck. I've got about 60 books on my shelf behind me. Okay, so I read up on everything, every new aspect of trading and even old aspects of trading. Okay, so I'm aware of symmetrical pattern. I'm aware of market profile. Market profile is basically where the smart money is or the bank money is. Okay, and I'm aware of price action. Hold on 1 second. Sorry about that. Yes, we trade Euro Huff and Euro Huff, Euro SEC, and Euro Polish. Yes, they are quite liquid markets, but we also it's chart analysis. At the end of the day, we are technical analysis. So if we have a decent chart pattern, which we've just had on Euro Huff, I believe, which I'll have a look at if you like, it's retraced to 61.8%. It's given us a daily ending wedge formation. It's broken lower. So it's the same. It's the same as any other currency pair. Euro Huff and Euro Polish is mainly for our bank traders, because obviously retail traders the spreads are ginormous. Don't know. I'm sure you get a platform out there that will let you trade it, but okay. So getting back to this, I'm just going to chart this out just to show you guys what I'm looking at. And then, so we've got this, it's basically the symmetrical pattern. You take this as wave 1, and then we look for extensions from this wave. So as opposed to most sort of Elliott wave, etc., looks for retracement levels for extensions. Okay, what we look for is actually an extension of this wave here. Okay, I've got a little drawing tool here, which I'll use. Bear with me. I'll just refresh the chart again. Okay, so 127%. Okay, 127% of this wave highlights that it could be a symmetrical or a harmonic butterfly pattern. Okay, we then need to look at different patterns within this sequence. So basically, what we want to look at, and it is a very decent pattern, this one. Okay, is we want to look at this in what they call the X to A wave. So this wave down here. Then we get A to B, which should retrace to 61.8%. Now this red line is 61.8%, 93.43. Okay, and we made 93.37 top. So I'm not going to argue too much with that one. Okay, then we get the move back down. Okay, but it has to make a higher low. This move should be around 78.6 or 88.6 of this move. Okay, and then we get this aggressive move higher here. Okay, and that in effect makes the butterfly pattern. Okay, we also want to look at this wave because we want to see if this wave is made up in 5 waves, and we have it 1, 2, 3, 4, 5. Okay, again you can stick a fib extension on here and it'll probably get pretty close to 61.8%, so it just overextended to 61.8%. Okay, nice reaction at 161.8. So you can see why I'm quite fanatical about fib levels. So if we've got this aggressive reversal pattern in dollar Swiss, then it dictates really that we should have a bullish sequence in euro dollar. Now, obviously, fundamentals at the moment are sort of dictating that we should still have the euro lower. But, and I am a technical analyst and I don't really trade fundamentals, but you know, yesterday, very little out of the ECB, out of Draghi with regard to any stimulus, and yet the US are talking about stimulus. So we've got to be looking at potential weakness in the dollar, and that's basically what we've seen since last Friday. Okay, the projection, which is obviously the bit that you guys will be concerned about, okay, is between 50 and 61.8% of the whole sequence. So that's here and here. So just get rid of all the rest of this so that we can highlight these levels. Okay, 93.57, 92.56. So yes, these are levels, 93.57, 92.76. A lot of the time as well, when it's a symmetrical butterfly formation, then the move down is aggressive. Okay, normally I'll get a reaction here, and I'll get a reaction here. So this is sort of off these exponential moving averages. So we break it down into shorter time frames. I do apologise about that. We would have kids, eh? And we break it down in short time frames to try and get some sort of decent wave patterns on it, okay? And here, Jesus. Okay, 261.8%, so wave one. And of course, the more we can get these to line up, the more it confirms our analysis, okay? Two, down towards here to three, up in four, and then the fifth wave zone. And 261.8%. Thanks. 261.8% lines up at 92.55. Children's holiday. I wish they didn't have them. Bar humbug. So that's the prediction, or that's the forecast for dollar Swiss. So we might get some pullbacks. Sold into a rally this morning. Nice evening star formation on the hourly chart. And this could do have been a bit more aggressive, so we'd like to see a strong sell-off from this level. So let's go on to a different chart now. Let's go on to euro dollar. Okay. At the end of the month, at the beginning of the next month, it's always good to look at the longer term time frame charts, especially the monthly. Okay. You do get what we call acute monthly reversal candles. Okay, AMRs. They're not that often, that common, but they do happen. So it's always worth just having a look at the monthly chart formations. Okay, reading it, seeing what it's telling us, seeing if there's any reversal patterns, etc. I mean, here I still think, and a lot of people probably think I'm quite crazy, that this is just in a large channel formation. Okay, and the bias eventually will be to break to the upside. And we can also see that these waves are all in three waves, apart from this leg here, and this leg is actually in five. So again, let's go to the weeklies first actually. Then we want to get some decent fib extensions. What I'm looking for price action wise as well is I'm looking for, I'm not particularly bothered about Elliott wave because it's the rules are too tight for me. The extensions, the ABC can go X, Y, Z, etc., etc. But what I do like, what I do like is the fib levels. Okay, and what I have got here, and what I want to see is I want to see price action around fib levels. So I want to see, I've only really got two candle formations that I like, and that's an outside bar and an inside bar. Okay, an inside bar tells me of investor indecision. Okay, and an outside bar tells me of a change in sentiment. Okay, and that's really it. And I want to use those all the way down into shorter time frames. So here we get a large outside bar, a reversal bar off the top. Okay, moves down, a bit of choppy price action. Another reversal continuation bar here. Okay, support. Just notice how we bounce off the cloud on these weekly and dailies. Okay, so it bounces off, goes up to the resistance level, which is our 62 EMA, which is held here. Okay, then becomes resistance here. We move in, we use the cloud as support, move back out, cloud as resistance, come out, we break out. It's a good breakout. But what we normally do, like wedge formations, triangle formations, etc., it comes back to retest the breakout. So it comes back to retest the triangle breakout. Oh, sorry, the cloud breakout. Those kids have thrown me off completely. And what we actually formed here was a small consolidating triangle formation, okay, which after a move down has a bias to break to the downside. So it's reading these larger time frame candles to give us a bias for our short views, okay. And just to look at this, okay, morning star formation moves up, but this sequence was only in 3 waves, okay. Then we get this inside bar, and we don't get a reversal candle, another outside continuation bar all the way down. And then this week, remember, we've only got tomorrow to go. It's a short week for most of us guys in the UK, and we're going to form an inside bar at 261.8% extension level, and that to me is a very high indication that this current trend is finishing. So I've got dollar Swiss telling me I should be shorting, okay, looking for shorting opportunities, and then I've got euro dollar that's basically screaming out that she's finished. This trend is stopped to the downside. I'm not going to talk too much about Elliott Wave, like I said before, but I once read something about Elliott Wave that basically talked about the different wave sequences. Smart money going in sort of at the first and the third wave. Smart money turning their position round in the 5th wave. And it basically said, you know, when you get into that 5th wave, when it's the last push, so it's the 5th wave and the 5th wave, he said that's the point when you get a taxi, you go to the paper shop, you hear guys talking about it in the pub. You know, it's the end of the euro. That's normally the time when Elliott Wave turns around. That's normally the time when it's a good time to buy. So not only have we got a 261.8% extension level, not only have we got an inside bar at the moment, okay, but the word on the street is the euro's doomed, and that to me is a pretty good signal that it's time to start buying. Okay, so onto the daily. Again, we can read these charts pretty well. Okay, just going back to my marking tool. Inside bars, outside engulfing bar, okay, outside bar, and then this outside bar here, and this was actually off the descending triangle trend line. So we had this descending triangle, it broke, that's the target level, which is about down to here, okay, so it overextended its target level. So as far as that pattern is concerned, that's complete. But what we also like to see here is 1, 2, 3, and again aggressive move down in 3, small correction in 4, which was actually to 23.6 to within 2 pips. So, you know, that's not to be argued with. Move down, and then what do we get last week after non-farm payroll? We get an aggressive outside bar, and that's the start of our move up. Now, this is where obviously the hard part comes, is where does it stop? Okay, now if it's a corrective sequence, then this first wave up, and down to shorter time frames, okay, it can be in 3 waves or it can be in 5 waves. Okay, we've got 1, 2, 3, pull down, 1, 2, 3. So I don't think she's going to push too much up before we get a correction lower to take us back up. Okay, and what I'm looking for, and I haven't got it yet, and I won't be jumping the gun either. I'm guessing it off the top there. Okay, it's going to be a head and shoulders formation. So we're looking at this being the head, this being the left shoulder, move down here to the right shoulder, okay, and this being the neckline. So we look for buy signals, and again this could alter because we definitely haven't made a top as far as this currency pair is concerned yet. It could be up towards here, and then you'll have to obviously adjust the right shoulder line. So buy signals around here, the breakers here, and we're going to be moving back up towards sort of 129 area, probably 128.50 in a push back up. And that sort of aggressive move will coincide with that dollar Swiss bearish butterfly formation. So I can talk quickly, I can get through all the pairs. Any questions about euro dollar or dollar Swiss? No? Like I said, please interact as much as possible. I'm not saying it's boring, because I quite like. I see it's short-lived. If I was looking, well, I am looking to long, but it's not a pair that I expect much more of a move to the upside. So, I mean, I'm long of Aussie dollar, which I think is a better currency pair to take up at the moment. I look at a total of 16 different currency pairs, so I don't get stuck with one view, one pair. You know, where's this one going to go now, etc., etc. And what I try to do is I try to use correlation of currency pairs, okay, to form an opinion, basically. Euro sterling. Again, go to the monthly, and then it looks like a flag formation. Again, biased to the upside, but this is when we've obviously got to try and break it down again into shorter time frames. Has this temporary correction finished? So again, fib extensions, very close to 261.8%. Sorry. So we get fib extensions close to 261.8%, and then we need to break it down through time frames again. Now, remember what I said about corrective sequences can be in 3 waves or 5-wave formations. Okay, or the start of a corrective sequence can be a 3-wave or a 5-wave formation. And basically, what I think we've got here is an A, B, C, D formation, okay, up towards our first resistance zone. So I'd expect to move lower, and then I expect the next move back up in euro sterling, and that works well with my correlation. I don't think there's any statistics that you can find. You basically just got to. I break down all the currency pairs in the morning. I very quickly write buy, sell, neutral, etc., with my bias. I then go through them all and say, right, if I think that's going to go up, can that go up? Can that go down? Can euro dollar go up and sterling dollar go up, and yet my euro sterling outlook still be valid? Okay. And then I try and break down price action where I think it's going to reverse to, etc. So euro sterling, if we just break this down into shorter time frames again, inside hammer there as well. Okay, we did get a 3-wave sequence down, but I think it's going to be more aggressive now. We've got an outside bar here. Okay, and we're pushing lower. Anywhere in this sort of region, 80, 79, 75, potentially look for buying opportunities. But at the moment, the bias is looking to the downside. Go and have a look at cable. Again, acute monthly reversal candles. Okay, inside bars here, wasn't really a very decent reversal candle here. This was actually an inside bar, so it sort of You have to wait for the bar to close, unfortunately. If you just take it off monthly chart formations, it's going to be very confusing around here. But you can see that once she does move back underneath this 15 EMA, how she uses this 15 EMA as rejection, okay? Keeps on pushing against, pushing against, pushing against. We're underneath 50 on the RSI, okay? So the bias is still to the downside, and she keeps on using it as resistance, and even to here, okay, until it finally breaks. So inside bar, which caused this triangle formation. It's not symmetrical. Long term, I'm unsure at the moment is the honest answer. Okay, we did form a virtual double bottom here, and we did break through. Now, what has a tendency to happen is we have a tendency to break through and then retest, which we called out this week. So the weekly, okay, moving back, excuse me, we haven't just broken inside, we've quite aggressively broken inside now after today, and this week we're going to get an inside bar again, so it's showing investor indecision. Really, for a confirmation, we need to see a break at the top or a break at the bottom of the outside bar. As far as the weekly analysis is concerned, to get a decent long-term view on that. But again, using the dollar bias, excuse me 1 second. Using the dollar bias, if we're looking for lower dollars in dollar Swiss and lower dollars in euro dollar, then really we should be looking for lower dollars in cable as well. So short-term bias is to the upside at the moment. And again, just reading the bars, very aggressive move lower, but then we get this in. There's no reversal candles in here at all, by the way. Okay, and there's one thing that hinted of a base here, and I don't know if you guys have heard of it. It's called the rule of 9. So it basically says that you can't have, or you shouldn't have, more than 9 candles in one direction before a correction. Okay, so this, sorry, I can't even think. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, inside a Rami candle, breaks to the upside, then uses that break level as support today to push higher. So the bias is back to the upside. My first area of resistance is here. Okay, 156 the figure. I'll then be monitoring price action around there. Just clear that off. Break it down again. 240. No, any time frame, to be honest. It doesn't always work. But as with all technical analysis, we're looking for something that works 70% of the time. Okay? And it works 70% of the time. Excuse me. Here we've actually got a count of 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that threw the rule book out. But look at the aggressive moves that we had lower after we had the 10 count. Here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And it continues. So it's one of those, I wouldn't say it's hit and miss, but it does work quite often. Okay, so short time frames. Learn something new every day. And that's hopefully what we're here for. Okay, so fib extension. Okay, 157.12. It's very hard. Somebody once asked me, when you have volatile price action after figures, especially like non-farm payroll, do you count the spike? And I will say yes, but sometimes if you, again, I'm not trying to fiddle the books, but sometimes you don't count the spike, so it retraced, so it's false. And then this was wave 1, 2. This is a better correction in 156.34, and then up to this level 156.61. But either way, 156.61. Okay, 157 the figure, and this is a great projection because what we're looking for is we're looking for previous areas of support and resistance. So, you know, we've got this congestion area. There's nothing indicating here at all that this trend is going to stop yet. Okay, got a decent spike down to support. Okay, off this 15 EMA. We're in the buy zone, if you like. So it's all looking pretty bullish for that pair. And of course, if we're bullish in cable, then we can be bearish in euro sterling. So again, just flipping back to correlation a little bit. Okay, it's lining up with our basket. Okay, our basket of different currencies. Go back to the daily. Okay, so like I said, I'm wary of this level 156 because it's not hit it for quite a while. And normally I will get a reaction around that level. If it does break 156, like I said, 61.96 is the zone for a move back towards this breakout level, and then a move back up here, I think. Okay, any questions about cable? I better get my you know what in gear because I've had that many interruptions. Okay, somebody was asking about euro yen. I keep it simple. I know it doesn't look simple. Ishimoku Cloud, which I'm mainly using for support and resistance on weeklies or dailies, but I do look to the cloud even down to an hourly. Okay, I want to see if she can break, and especially when it coincides, okay, with these moving averages. Okay, I want to then look for price action to indicate that we might even, you know, get some sort of short-term correction. And here, okay, through the moving averages, outside bar moves down, inside bar moves back up. So it's sort of like trying to read a book. You can't ignore what's being said. You've got to trade to that book because everybody else is reading the same book. Obviously, some people interpret it differently, but is cable really reversed to up? No corrective wave from 163 drop. I trade higher time frames daily mainly. Yeah, nothing goes in one direction. Not forever, that's for sure. I have to work, hit princess, but this is what I do for work, luckily enough. Okay. What does that scream out to everybody? Anything? By the way, this black line here, it's not a black line for... We're going to do another webinar at some point on market profile. Okay, market profile basically tells us where the smart money is, and it indicated that basically banks were happy with price action around 97.02, and it acted extremely well as support. I think this is a double bottom formation. I might be calling it a bit too soon, but it looks like a double bottom to me. Okay, and what other indication that I've got is that I've got 1, 2, 3, 4, 5, which should have been a bullish wave up, and then I've got 1, 2, and there's actually 5 waves in here. Okay, to the downside, but you can't see it on the weekly chart. So 5 up, 5 down. Screams to me that it could be smart money is under the mattress. Yeah, you're probably not wrong. So there's a little bit of divergence here. Okay, you know, the chart's making a lower low, oscillator's making a higher low, but it's not aggressive. But this is obviously what interests me. Morning star formation, and then at the moment we've got an inside bar. Okay, we've got a day to go before the end of this trading week. So good probability that we're going to get an inside bar here. No, I don't think you're crazy at all, because I'm quite bullish on dollar yen as well. I think dollar yen's due a correction soon, but definitely quite bullish. Okay, what can we see here? Okay, price action. Okay, 1, 2, 3, 4, 5. Okay, so it's screaming out that we should be moving higher. Not a great daily reversal candle off the bottom. But if we then break down through time frames again, okay, 240 minutes, sort of moved well and truly into the buy zone now. Inside bar here, 60 minutes, aggressive move up. Again, it's hard, sort of picks. I think we've paused around 161.8%. Jesus. I'm not having much luck today, am I? Sorry. I'm going to crash the cam. The only thing I haven't got is a dog barking. It is a pleasure working from home, but it can also be a pain at times. So, up here, 102.66, 102 the figure. Again, break it down to our dailies. What do we see? 102.66, 102 the figure. So it's moving back up towards this zone. Okay. And again, daily chart doesn't dictate that you should get any sort of reversal. Hourly chart warns that we might dip lower. Okay, but I don't think it's going to be too aggressive, because this move up has been a nice run. Yes, I am Dragonfly in the shed at the back of the garden. Quite a nice shed, that. Okay, I do apologise about all the mishaps and shenanigans this morning with kids and gardeners and what have you. I've just been told that we've got to wrap it up. I think he's got somebody else coming on now. I hope you've enjoyed it. I hope you've found it interesting. It takes me precisely 2 minutes to get to work, and that's from actually getting out of bed. So it's not too bad. And I'm normally well away from the children. So yeah, the website is www.firstsupporttrading.com. I'll just stick it. Okay, thanks very much. Take care, and I'll speak to you guys next Tuesday. Okay, bye now.